Gold prices experienced volatility today, with a rapid decline to around 2,415 in the early trading session, followed by a swift rebound. It tested resistance at 2,460 at noon but failed to break above it. However, the market turned bearish again ahead of the European session, and the decline accelerated heading into the late trading session, breaking below the 2,410 support zone, with lows touching 2,365. Subsequently, prices stabilized and recovered, rebounding to 23.96. The intraday price action in gold was characterized by frequent long and short conversions, particularly during the Asian session. This volatility was influenced by a sharp downturn in global stock markets and a sustained decline in the US dollar index throughout the day. During the European session, gold prices plunged sharply, breaching the 2,400 mark, influenced by both technical factors and the broader stock market crash. From a technical perspective, today's price action formed a large bearish candle on the daily chart, slicing through the 5, 10, and 20-day support lines. This suggests the potential onset of a new downward trend. The longs likely took profits and closed their positions, contributing to the decline. Going into the evening, traders may focus on the trendline support and the 60-day moving average in the 2,375.70 region. In the coming days, it is possible that the market could retest the previous gap in the 2,350.40 zone due to the prevailing selling pressure. Given the overwhelmingly bearish market sentiment, short-term long positions are not advisable at this juncture. Instead, traders may consider potential buying opportunities if the decline finds support near the 60-day moving average, 2,370, or the aforementioned gap area, 2,350.40. For evening operations, a short position near 2,410 could be considered, targeting 2,395 and 2,385 as downside targets. A long position could be evaluated below 2,380. The technical outlook indicates a strong downward momentum, followed by a weak upward reversal, with the latter occurring within a resistance zone. The MACD indicator in the lower timeframes exhibits a negative divergence, reinforcing the bearish bias. Consequently, the likelihood of gold prices falling further is substantial, with an initial target region of 2,374–2,387.